Hello traders, Gary Wagner here just after 12 o'clock in Honolulu, 6 o'clock in New York. It's Monday, 23rd day of October, 2017, and this is the Daily Report for Gold and Silver. We have nominal upside moves in both gold and silver, with gold trading up about $2.10, closing at $1,283 per ounce. Silver up 2 cents at $17.10, and that all in light of a stronger U.S. dollar, up almost 0.25% at 93.81. So traders, even though gold did trade under pressure today, actually trading to a intraday low of 1273.60 can be illustrated by this single candle on our daily candlestick chart. What impresses me really is the low that was achieved, the size of this tail in comparison to where the market actually closed, and the identification of this single candlestick is a hammer. Now, a hammer is simply part of the umbrella group of candles, which are either a hammer, which is after a defined downtrend, or a hangman if found at the top of the market, such as right here. The other two umbrellas are a shooting star, which occurs after a defined uptrend, or an inverted hammer, which is what you would see at the bottom of the market. An illustration of a shooting star would be something like this, and as you can see, it is the opposite of the hangman. However, both signal the same type of exhaustion pattern and potential for key or pivotal reversal. Another pattern that can be seen in today's action is if we look at the last 2 trading days, and when we do that, we get a simple pattern called a bullish harami, and that would be using these 2 candles right here, in which the open and the close, that's the green candle, is all found within inside the prior trading session, which opened higher, of course, and closed lower, as indicated by a red candle. Now, this type of pattern, along with the fact that it is a hammer that we're finding at the bottom of the market, coupled with the fact that the lows, these recent lows, have all held. And although we had an extreme low today going into the 70s, the fact that we closed at or above 80, as we spoke about on Friday, is critically important. What that tells me is that if we get some follow-through buying tomorrow, that would indicate a potential reversal and could in fact trigger a buy. If that is the case, obviously, we will look to issue a trade recommendation by sending out a special trade alert through email as well as SMS text message. And for those subscribers who have not signed up for getting their trade alerts on the phone, should go and do so now. There's no extra charge. All you need to do is put your phone number in, and that way you get this signal as soon as it is issued right on your phone. And traders, the other thing that is worth mentioning today is the fact that we have seen gold trade higher, as I said, up around $3, that in light of a stronger U.S. dollar, with the dollar index closing up about 0.25% today, 93.81, and a significant move to just above the current level of resistance, which we have pegged at 93.75. And traders, for those that look at and trade silver, we do have a similar scenario. We can see where the recent lows came in at the 61% retracement. Again, this is a large retracement from the low 15s up to mid 18s, and the 61% retracement. Just as in gold, we had this rally and then the market backed off. The one key difference right now is that 1709 is a 38% retracement of silver, and at the same time, we do see support that comes in just below 17 in terms of these lows. I would feel more comfortable to watch silver have a break above 1710 before feeling comfortable going long that particular market. For right now, our stance is neutral or flat with no active trades. And as I said when we looked at gold, should we see the proper follow through tomorrow, there's a high probability that we will issue a buy signal. Traders, we saw some weakness in the U.S. equities markets and realized that the recent rally in equities has been partially, if not primarily, driven by optimism about an upcoming tax cut that some legislation actually was passed last week. However, to do that tax cut, I believe is going to be a very, very difficult feat, in that we have had our annual budget deficit grow tremendously by $88 billion, and no entitlements trimmed at all in order to actually implement that tax cut. So we'll have to see. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update view. Bye-bye.